And the dollar is going to fall as the Fed starts cutting. Eventually, by fall, they'll be talking about QE again because the economy, they've overreacted. They don't know how badly they've overreacted. They're driving the economy in the ditch, which is what the economic data is already showing. And just like 2010 and 2019, the metals will see this and really begin to react by summertime.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for January 3rd through January 10th, 2023, while supplies last. This week we feature both of the only regularly minted 4/9 fine silver coins in the world. Silver Maples backdated and Silver Kangaroos from 2022 at just $4.19 over spot. Both the backdated Silver Maples and the 2022 Silver Kangaroos are renowned for their purity, recognizability, and design. They both come 25 to a tube, and Maples are 500 to a box, while the Kangaroos are one of the most affordable boxes around with just 250 coins. We have both coins in stock and ready to ship, and both at just $4.19 over spot. And finally, both are IRA eligible. If you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. Our number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Craig Hemke from TF Metals Report. Craig, thank you so much for joining us today.
Hey, Happy New Year, Elijah. Buckle in. It's going to be a crazy one.
Yeah, well, Happy New Year. And you recently put out your forecast here on your website, tfmetalsreport.com. And by the way, I know you were going to mention this later, but you'll have a promo code, it sounds like, for people, or a discount for the subscription this year.
Yeah, look, I feel like I say this a lot. But this particular year is going to be really interesting. And, absent, some crazy epical type changes, it's going to play out a lot like years we've seen in the past. I've been doing this now for 12 years, and I think there are historically analogous years to what's ahead. And I think it's very important for people to understand. And I think my site and the people there do a great job in helping you through. So every once in a while, we got a coupon code. Anybody, if you're watching this, you just want to kick the tires on what we do, go to TF Metals Report, hit the subscribe button. You can watch a little video. You sign up for a new monthly subscription, monthly. It's $15 a month. But if you put in the coupon code 2023, you'll get half off your first month. So it'll save you, $7.50. But for 25 cents a day, you can find out if what we do is going to help you through the year or not. So please, we're already off to fulfilling a lot of what we wrote about, just earlier this week with the Macrocast. And so I'd really encourage everybody to at least consider joining TFMR. And here's a way to kind of save a few bucks to see if it's worth it. Your
forecast for this year, as you mentioned, it looks like this year is going to parallel 2010 and 2019 for the metals. So it should be pretty good. What is your perspective on that?
Well, and that's the historical analogy in that, we begin this year and even this week as we record this, we've had, a couple of different Fed statements come out, Fed governors and say, oh, yeah, we're going to keep on hiking, and all this kind of stuff. And the latest guesstimates of interest rates from the 8-figure Wall Street economist guys are, 4 and 5% on the 10-year note and all this stuff. And we've seen this before, man. This is not complicated. Everything changed after the financial crisis in 2009 when the Fed began QE. That changed everything. And so as we entered 2010, that was supposed to be a one-off. The economy was going to be soaring. They were never going to do this again. The economy began to falter in the first half of 2010 and into the third quarter. And what happened? By November of 2010, here came QE2. Well, the metals went sideways for the first half of that year. And then in the back half, silver went from 18 to 30 and gold took off as well. And then you know what happened in 2011. Okay, so now fast forward to 2018, same old garbage. Oh, the Fed's going to hike, and Jan Hatzius at Goldman Sachs said the rates are going to keep going higher. And Fed was talking about 3 or 4 more rate hikes in 2019. And what happened? The economy faltered. And by summer of 19, the Fed started cutting. And the 10-year note went from 2.5 down to 1.5, not to 4.5 or 5, like everybody was saying. And what happened? The metals went sideways for the first half of the year, and then they took off. And so it's going to be really, really important for people to understand that that's exactly where we are again. Even Jan Hatzius, who still works for Goldman Sachs, is still saying 4.5 on the 10-year. And it's down to 3.5 today as we speak, and it's going to 2.5 this year, not 4.5. And the dollar is going to fall as the Fed starts cutting. Eventually, by fall, they'll be talking about QE again because the economy, they've overreacted. They don't know how badly they've overreacted. They're driving the economy in the ditch, which is what the economic data is already showing. And just like 2010 and 2019, the metals will see this and really begin to react by summertime. And if you're not patient, if you're not aware of all this, if you get caught up in the minutiae of the ups and downs every day, you're going to probably screw yourself out of it. You'll get distracted and wrong-footed. But if you are patient, you'll get that same run like we'd got in 10 and 19. And then, a reminder, the real action then took place in 11 and 20, which, again, would set us up for a really big boom in 24. So that's why I think it's so important for people to be paying attention and to understand the macro at this point.
No, when it comes to, I guess, the first 6 months, you're saying it might be a bit frustrating for the metals market, but then the next 6 months, the last 6 months of the year is going to be quite good here. So it sounds like kind of an accumulation period, maybe, for people, the first 6 months of the year.
Yeah, that's what the pattern has been. And if you look at the current pattern on the chart, we have been, I guess the technical term is consolidating. Flagging is what technical analysts like to call it on both gold and silver. Ever since that big rally in 2020, gold has essentially been between 1,700 and 2,000. Broke out falsely to the upside a couple of times, broke down this fall falsely, and now it's, square in the middle. It's like 1850, right? It was right in the middle. And silver is the same thing. Silver been bounded by 22 and 28. It banged out a couple of times above 28, fell below 22, and now it's right back in the middle at 24. It'll probably continue to chop sideways because the Fed, even this morning, these goons are out there saying, oh yeah, we're definitely going to keep hiking, well above 5%. And the economy is in the ditch. And so here's the thing, Elijah. They waited. You look at these goons now, they're sitting there saying, oh, there's no way we're going to cut rates in 2023. Cash Carey just said that yesterday, Thursday, the 5th. Well, if you just rewind 18 months, that same guy was saying there's no way we're hiking rates until 2023. So why do anybody takes these people seriously? They're always reacting. They're never being proactive. And so they waited to hike. Inflation got to 10%. Then they went crazy. They waited, through the war. That kind of threw them a screwball. They didn't know what to do when the war started back in February. Then they went crazy with all these 75 basis point rate hikes. They can no way measure the damage they've done economically. And as we record this, the metals are soaring today and the dollar's down, not because of the jobs report, but because these purchasing manager indices, whether they're measured by S&P Global or by ISM, are now all four. The two manufacturing PMIs and the two service sector PMIs, all four are sharply down and negative and below 50. Anything below 50 is contraction territory. The official PMIs put out by regional Fed branches like Chicago, Philadelphia, New York, they're all negative as well. Those Fed PMIs, when they've gone negative before, that has preceded 8 of the last 8 recessions. Okay, so they're batting 1,000. But the Fed, we're just going to keep hiking. They have no idea. Inflation's obviously coming down. So anyway, the key to all this, the economy goes in the ditch. The data is just going to get worse and worse through the first and second quarter. And by June, they'll either be cutting rates, which again, nobody expects, or at least be talking about it. And that's when we break out to the upside of those ranges. The spec money comes rushing in, and it gets get pretty exciting again for the metals.
And you've mentioned how the Fed really has to become the buyer of last resort because more countries are going to be moving away from the dollar and not purchasing U.S. bonds. Can you expand on that?
Well, yeah. There in the past, right, all these central banks were buying bonds, trying to keep rates down. That has led them all off of a cliff. And so now the Bank of Japan totally focused on supporting their own bond market, $180 billion a month in December, the biggest month they've ever had. So it's not like they're supporting the U.S. bond market. The Bank of England, same thing. The Russians and the Chinese aren't buying treasuries anymore. So the Fed is, for now, longer rates are coming down. 10-year notes already down 30 basis points in the first 4 trading days here of 2023 because the Fed's getting some help by regular investors and hedge funds and cash on the sidelines going, we're going into recession and the Fed's going to be cutting again later this year. 3.5 on a 10-year note's pretty good deal. But at the end of the day, the Fed has to be the buyer of last resort, just like the Bank of Japan's the buyer of last resort for their bond market, and around the world. We're already running, again, a more than $1 trillion deficit here in the U.S. With interest rates spiking the way they did in 2022. The interest on the national debt, that line item, well, if there was a budget, the line item on the U.S. budget would be almost $800 billion a year this fiscal year in servicing costs, interest costs on the national debt. The rates keep going higher. It's going to go to over $1 trillion. And pretty soon that'll exceed defense spending, social spending. And then the Fed just has to print even more to keep the wheels spinning. So this idea, I laughed at this. I pick on Jan Hatzius because the guy's a partner at Goldman Sachs and he's making probably $10 million a year, if not more. And he's always wrong. And 4 years ago, he said, with the 10-year note at 2.5%, 3%, he said it was going to 4.5% because the Fed was going to keep hiking. And he's saying the same thing now. He was wrong then. He and his ilk are going to be wrong now. And it's just so important for people, investors in general, but particularly those invested and interested in the precious metal space, to think for yourself, man. Don't just swallow what the mouthpieces of the mainstream media and, what your stockbroker, reads off of, what his bank is and his investment firm is telling him to say. Think for yourself and trust yourself and prepare for, again, a year that is going to catch a lot of people by surprise, judging by what expectations are as the year begins.
I think last year definitely caught a lot of people by surprise with, the stock market down quite a bit. We had been in a bull market and, a blip, a crash during COVID, but it recovered real quickly. So for so many years, we had just been in a stock bull market, and here we are, all the indices down pretty much. And you've mentioned also how there's probably going to be there are a lot of geopolitical wildcards in 2023. We had that in 2022 with the Ukraine war. What are a couple things that, may happen, may not happen, but could really just put a little chaos into the system this year?
First of all, that ongoing war, is an existential threat to everybody. And I would imagine, Elijah, the last time we spoke, as we were recapping 2022, I don't know if I told you this, but I told about everybody else this then. The biggest event financially of 2022 was the first weekend of March, I should say, when the U.S. froze and, in a sense, confiscated Russia's non-domestically held foreign currency reserves, which is about $350 billion, but also kicked them out of SWIFT. And as we look back, 5 years from now or 10 years from now, whatever, that will be the biggest financial event, not only of this year, but probably every year going forward. Because what that proved once and for all is if you as a sovereign nation have interest, and I'm not saying I approve of what Russia did or approve of what China does or anything like that, but they're going to act in what they perceive to be their own best interest. And if you as a sovereign nation acting in what you, for whatever reason, perceive as your own best interest is somehow sideways with the U.S., you're cut off. Well, wait a second. You're going to go, we're not going to, look, we've got our own interests that we're worried about here. And so that really sped up this de-dollarization thing, this eventual monetary alternative to, a parallel system to the dollar, whatever, for these BRICS, if you will, countries to use. Now, speed up. This is a process that's been going on for 15 years. So speed up, does it go from 1 mile an hour to 2? You can't say for sure that alternative is going to be offered this year, but it definitely headed in that direction. So maybe it will. Maybe there'll be more signs of that. Why is it that gold, besides all this macro stuff, very first day of the year, first 2 days of the year, gold was up 30 some odd dollars while the dollar was up you hear all these reports of central banks buying gold. Maybe there's this, this movement that really takes hold this year of gold demand actually beginning to impact that futures price. So those geopolitical factors and how they play out are going to play a key role too. And again, that's what's all the challenge of running a precious metal site, because if you're just a trading site, you can watch dots on a screen and all that kind of stuff. But if you're going to focus only on the precious metals, man, we got to watch everything, right? I mean, you know that. And those are geopolitics is going to play a big role this year too.
As we mentioned, the stock market took a big hit last year. If the Fed does reverse, what do you see happening to the stock market this year?
Well, you see that in the action this week. Every time there's any hint of what we talk about that macro shift coming faster than people expected, the Fed pivot, whatever, the stock market rallies, takes off, goes to the upside, because they're thinking, hey, more free money, right? And everybody probably listening to seen those charts, plotting the S&P with the Fed balance sheet, and they just rise with time and then decline and rise with time. And so depending on how soon that idea takes hold, and then once it gets into place again, I'm sure the stock market will rally again. In the meantime, the Fed, their governors, the former governors like Bill Dudley, have been telling everybody now for 9 months that they want to inflict losses, that they want to hit the demand side of the supply-demand equation to get inflation under control. So and with the economy slowing down, that affects the earnings part of the price to earnings ratio, the PE ratio. And so it wouldn't surprise me if, like gold and silver, the S&P just kind of continues to go sideways through the first half of this year. But history is replete with examples of equities going, crazy higher in countries that have where they're printing money, all the way back, to the Weimar Germany. So stock market, as one of the only games in town, when all this money gets printed again, will probably benefit once more.
Now, do you see precious metals benefiting more? Because sometimes you can kind of have a silent crash in the stock market if you see high inflation and just the stock market going sideways or not really keeping up with inflation.
Here will be a thing to watch, Elijah. I think with all honesty, we can, if you're going to be objective about this, we can all look back at 2020 and 2021. And, there's a kind of a limited amount of alternative investments outside of the dollar-based system where money flows. It used to just be gold and silver and the gold miners, right? Then along came Bitcoin, and that siphoned off some of that cash, in demand. And then here came this, multi-trillion-dollar Ponzi scheme stuff of all these, cryptocurrencies. And, a lot of the speculative money or money that just wanted something outside of the fiat system got siphoned off into that as well. But I don't know if the damage that's been done, I don't think that stuff's ever coming back. I mean, these scams of the yield harvesting, and all that stuff, I don't think that's coming back. So as this all turns again upside and investor interest, speculator interest, all this kind of stuff gets focused again, on allocating even just a couple percent outside of the fiat system, Bitcoin's going to rush to catch up to, what it should have gotten to last time. And gold is like, well, we might as well buy some gold too. I'm not going to, buy one of these other deals, crypto or something like that. Gold and silver and the miners will benefit too. And one other thing I want to point out to people that I think is really interesting. As we record this on Friday, the GDX is up again today. And it's going to be its fourth green candle in a row to start the year. And it's now up on the year, just the 4 days this year, more than 10% year to date. Okay, and that's with silver kind of sideways. And like I said, gold up $30 or $40. That intrigues me as well. I mean, to get that kind of move, and again, we're already up from 22 or something like that 2 months ago. To get that kind of move the first 4 days of the year, that to me smells of hedge fund and institutional money getting allocated to the sector again for the first time in a year or two. So watch the shares too.
I know another bullish factor for precious metals could be China's reopening, because silver is a very much industrial metal. What impact do you think that will have on the metals?
Well, that's one of the things we missed out on and were wrong about last year. In my forecast last year that I printed last January, one of the bullish factors, what we call the Chinese credit impulse. And when that is rising and they're printing money and they're buying stuff with their printed money, it was projected to rise last year because everybody thought, well, we're now to Omicron. Omicron's, not that bad. China will be reopening and their demand for everything is going to soar again. And as we know now, I mean, they didn't really start to reopen their economy until you had this massive push of civil unrest in the fall. And then finally by late December, they finally, they're moving in that direction. And we'll see, if that it probably will continue. So as that continues, there's going to be a rush to play catch up, right? And again, a rush by the Chinese to move out of dollars, and spend it on their defense spending and spend it on infrastructure and all that kind of stuff. Well, we're already at a period now over the last 10 years, industrial metal stockpiles around the globe, if you add up New York and London and Shanghai and every place else where it's stored, industrial metal supply, copper, zinc, lead, nickel, aluminum, I mean, they've all been dwindling. I've got a chart in my annual forecast. It just shows you this dramatic trend. Well, again, if all of a sudden China comes back full bore, and part of that demand is not only industrial metals, but silver, solar panels and batteries and the rest. Where's the metal going to come from? That, the Silver Institute put out that report. I mean, not me, the Silver Institute, this mainstream organization put out that report in November saying we're running about 150, maybe even $200 million, 200 million ounce, I should say, supply deficit. Okay, well, what happens if China reopens, and India and, all these other countries go full bore buying metal, and the dollar falls at the same time. All of those pieces combine into, again, this year like 2010 and 19, next year like 2011 and 2020.
Wrapping this up, it sounds like, again, you're looking for the first half of this year, not too exciting in the metals market, but the second half and next year to be quite exciting. We can't give individualized investment advice, but some principles that people should be thinking about right now when it comes to investing in the metals.
Well, first and foremost, and I every time I say this, and I've said this a couple times already this week, and I almost put it in the report, but every time I say this, I fear people are going to go, I've been patient for 12 years now. But patience is the key, because it's going to be choppy. We've seen choppy already this week, right? I mean, silver goes up and then all of a sudden the dollar goes up on Thursday and silver goes down 60 cents, goes down, 4% intraday. It's going to be choppy. It's going to try to buck you off. Okay. And there's going to be trading sites and stuff out there that say, oh yeah, now, silver is going to go down to this, that, and the other thing. The key is going to be trusting yourself, understanding, following the macro data, not just, the technical data, follow the macro data, understand where this is headed, that the Fed ultimately, is going to be caught having over tightened and driven the U.S. economy to the ditch. And then all of a sudden they're going to panic and go the other way, just like they panicked in 2022 with 75 basis points, three times in a row. And so you just got to stay sharp and not let yourself get thrown off by what will probably be pretty choppy, the first 3, 4, maybe 5 months of the year. And, it's not as simple as just, buy the dip, but maybe a dollar cost average, maybe now's the time to, set up one of these online accounts. A couple of my advertisers have good online accounts, where you can access near spot. Maybe now's the time where you, I don't know, does Miles Franklin have a thing where they can take a little money out of you, you can give them a little money every couple of weeks sort of thing and buy how many ounces you can get, and just not be so concerned about the timing of your purchases. Just keep buying and accumulating because, again, history shows us that when this trend changes, when people figure it out, that's when things take off. And now that we'll have removed that siphon of dollars going into, these cryptocurrency scams, will probably go up and farther than people expect. And then one last thing, Elijah, that I've been waiting for, maybe it'll happen this time. Once again, in 2022, everybody bought what the Fed was selling. They bought it in 2010. They bought it from 14 to 18, that, oh, yes, we're going to normalize the balance sheet, and no, they're not. Okay. They're not. Everything changed in March of 2009. And the next QE program will be even larger than the last. That's what the trend is. And one of these times, everybody investing in gold and silver is going to figure that out. And instead of having the GDX go from 15 to 45 and then back to 25, it's going to go from 15 to 45, maybe pause, and everyone's going to go, okay. And then it's going to keep on going. And so patience and trusting yourself and watching the macro is going to be the key. And that, again, that's when we started off talking about the importance of my site and sites like it for educating yourself. Nothing could be more important right now than to stay on top of things and think for yourself.
Fantastic. Well, Craig Hemke, we really appreciate your insights today. Before I let you go, where can our viewers find you online? And did you have any last thoughts for our viewers?
Well, I'll send you the link to that forecast, Elijah. And if you don't mind, you can put it in the body of your YouTube description or something. And then people can just click on that link, go read it. If it makes sense to you, then, at the very bottom, there's a link to, the subscribe button on my site. And again, you put in, join the site, pick a monthly subscription. Your first month, if you enter the coupon code 2023, it'll only be $7.50. If you stick around, it'll be $15 going forward till you cancel. But for $7.50, see if we can't help you out. I'd encourage you to check us out. Again, tfmetallsreport.com.
All right, Craig Hemke, once again, thank you so much for your time. God bless and Happy New Year.
You too, my friend.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.